We all want to have $1 million saved in our investment account, but the majority of us aren't taking the proper steps to get there. So in this video, I want to give you some tips that helped our clients get to $1 million as fast as possible. The first thing our multi-million dollar clients do is to have a budget. You do not know what you can save if you don't have a budget. So step number one, and it's really the foundation of everything, is have a budget. Know how much you're spending, know where you're spending too much so you can free up some cash flow, and not only start saving, but start saving more. How do you know how much you can save if you don't know how much you're spending? So create the budget and start saving more money going forward. That's step one of any proper investment plan, especially if you want to get to $1 million. The second tip is time is on your side. So the earlier you start to save, the more your money can compound. Compound interest is the number one powerful tool to use to get your account to $1 million and beyond. And I've seen this firsthand with our clients the last 18 years, in that those clients that just trickle a little bit of money even in every month, then it starts to grow and snowball. Think about making a snowman in your backyard as a kid, right? You start with this little ball and it's like, this is never going to get anywhere. And all of a sudden it just starts compounding itself. That's exactly how investment accounts will work as well. So don't worry too much about, I can't put this much in, I can only do this, I'm gonna leave. No. Do what you can. Again, work on that budget to start increase your savings, but get compound interest on your side. So start as early as possible and get your money working for you. The third tip is to make sure you understand how your accounts work. How does an RSP work? How does a TFSA work? Which one should I be using? And for a lot of you, if you make over about $55,000 a year, the RSP is probably going to make the most sense for you. Again, if you put $5,000 into RSP in a 30% tax bracket, you're going to get back about $1,500. Now you could take that and reinvest it in your RSP, or you could take it and put it into your TFSA account. You can have your money work even harder for you. And that's really the big stressor here, is you work hard for your money, but if your money can also work hard for itself, you now have two items going forward. Yourself and your money, you're both working towards that $1 million goal. So make sure that you have your money working for you in the right types of accounts. Understand what an RSP is, how it works, the tax benefits. A TFSA. TFSA is a very powerful tool to save in. Make sure you understand how it works based on your income, your goals, your retirement goals, shorter term goals. Understand where you should be saving to maximize every dollar. The fourth tip for you is to make sure you understand how some of these other accounts are used, like an RESP or a first home savings account. Now, the first home savings account is a newer type of account, but if you're someone that's looking to save not only for retirement, but for a home purchase one day, you need to know how this account works, how to utilize it, and the benefits to it. Probably makes sense for you. So if you qualify, then you want to start saving into this account. It's a very powerful tool that the government recently released. Make sure you understand. We do have another video on that. We'll link that below. Check out the First Home Savings Account. It's a powerful tool that you need to start using to maximize your savings and overall net worth going forward. The fifth tip, and most people don't do this, but the wealthy do, and that is to automate your savings. Your savings should go in every single month regardless. Pay yourself first. Too many of you are spending all your money, or most of it, and then whatever is left, if there is anything, you're putting it into savings. Look, paycheck comes in, obviously taxes are withheld, and then money goes out to your savings. Pay yourself first. And then whatever you have left is what you live off of. The sixth and final tip for you, and this is really to help you so that you don't derail the plan. Look, you can take all those first 5 steps and get in a great direction, get momentum, get compound interest, just get that snowball working for you. But number 6 is make sure you don't pull out any of your savings other than for purchase of a home or a big thing, but anything that's non-emergency. We have clients over the years that have phoned us and said, you know what, Adam, I want to take the family to Disneyland or to Mexico or whatever it is and pull money out of the RSP. And those same clients 15, 20 years later, guess what? They're hitting retirement with very little. They did really poor planning. We tried to convince them otherwise and show them, look, if you do this, this is the long-term cost of it. You're not going to have enough money for retirement. And they avoided it. They ignored us. They didn't listen to our advice. And now they're in a really tough position. Great to go on the trips, do that stuff. You need to enjoy your life, but carve that out into a separate bucket. The savings that you have for longer term for retirement to build this $1 million nest egg, don't disrupt it. Let it work. Again, if you pull out $10,000 from that, look at what that does for the compounding of that long term. So make sure you only pull out if you have an absolute emergency. Any non-emergency item, doesn't come from these accounts. I know for a lot of you, $1 million saved is a big number. Seems like an astronomical number that you're never going to get to, but trust me, if you follow these 6 steps diligently over time, you will get there, I promise. It'll build wealth. And again, these are creating just good core fundamental habits as you go forward. So you might get to $1 million, you might get to 2, you might get to 10. Who knows where the end is, but using these 6 tips will create good habits for you to help build more wealth sooner rather than later.